How's everybody doing? Let's move to another lesson for today. We've done lesson 1, lesson 2. So today we're going to do lesson 3. It's going to be very short. We've been talking about all the tools that we can use in TradingView. Sorry. And we've been talking about all those tools. And we got some more for today. But we're just going to stay today about, we're going to talk about MACD. MACD is a indicators that are very important that can give you a way to exit and buy. So you can enter to the market, buy and sell. So in MACD, we have two different MACD. I'm going to show you. All of them have their own things, but they are similar. They do the same thing. So whenever you want to use indicator, because last time we were talking about those tools down to your left, I showed you how to use them. And we're going to talk about some indicators today. We're going to talk especially about indicator like MACD. So whenever you want to use your indicators on TradingView, you go to indicators. You see indicators there, you click on it, and you can find anything that you want there. For instance, we're going to talk about the moving average, MACD, which is moving average conversions divergence. We call that MACD. So whenever you want to find them, you just type MACD, MACD. See, we got different type of MACD, but we're gonna see two of them today, and those are, I think, those are the two best important we're gonna see today. We're gonna see the MACD, which is the first one, which is moving average convergence divergence. This is the one we're gonna talk about today, and we're gonna see also this one down there, the MACD crossover. I'm sorry. So we're gonna see the MACD crossover, and we're gonna see the MACD, which is the moving average convergence divergence. Now, this one is a MACD. So you see, once I click on it, it's already been plotted there. Both of them, you see. This one is MACD. It has a what you call histogram on it. And then the next one we're gonna go is a MACD crossover. We're gonna tap again, MACD, MACD, we call it MACD, and that's a one crossover. We're gonna add both of them in our chart today. We click on this, and it's already been added there. See, that's the one. See, we got this one, the MACD, which is the one is a moving average convergence divergence, and we have this one is a MACD, which is the crossover. So we have those two MACD there, and we are in Tesla today. Now, all those two MACD works. They are similar. They are almost the same, but we can call one of them is for most of the time is for long term. The one that's for long term, you can use it for long term, is the one that says MACD, the moving average convergence divergence. That's the one. The one that have the histogram on it. We can most of the time we can use it for long term. If you want to get in the stock for long term, for maybe that says for 3, 4, 5 months or 1 year, you know, long term always we consider long term after 1 year. After let's say after 9 or 12 months, we can consider it as a long term. We we use MACD convergence divergence most of the time for long term. And the one for the crossover, we call this one down there crossover. We can use it for short term. Most traders use this one to trade for short term, to get into the stock market fast and go out. That's the best one to trade for short term. The crossover, those are the difference between these two. But they are doing the same thing, mostly because they have what you call the moving average on them. Those two lines you see, we call them moving average. That's why we call this one, the first one, moving average convergence divergence. It has a moving average on it. Those lines, whenever you see those two lines there, those are the moving average. All of them cross over each other. They always go. Now, the moving average convergence, divergence, this one, what is the difference? It's a momentum and trend following indicator that helps traders access the strength and direction of a trend in the market. So it has like three components that you can see between this one. So this MACD line is calculated by subtracting a longer period exponential moving average from a shorter period EMA. So typically, what does it mean? So it's like the MACD add the 12p period EMA minus 26 period EMA. So this line, as you can see there, represents the difference between the two EMAs and gives an indication of momentum change. So now it has what you call like, it has a signal moving average 9. That's what we call the signal line is a period, is a 9 period EMA of the MACD line. It helps to smooth out the MACD line, making it easier to identify potential buy or sell signal. So what does it mean now? When you see those two lines, we have the blue line, we call it MACD line. The orange line, we call it the signal line. So whenever the blue line is crossing, which is the MACD line, is crossing above the orange line, is a bullish. You know, in the stock market, we have two things. We have bullish and we have bearish. Bullish mean whenever the stock is in green, is going up, is moving up. And bearish mean when the stock is red, whenever the stock going down. Now, so the MACD line represent the bullish green, that means stock going up, the blue line, and the orange lines represent bearish. That means stock going down. So therefore, whenever the MACD line cross over the signal line, is a bullish. That means stock's going up. As you can see there, let me just change it, put it in 1 day for you so you can see it's better. So as you can see there, so the blue line, which is the MACD line, is bullish now. Let me see if I can use one of my pen there so I can help you see better. Now, it's very clear now. So you see, this is the MACD line, which is the blue line, is above the orange line. So whenever it's above, you see the stocks is green now. You see, that's meaning you get stocks going up. If you put them together, if you match them, you're gonna see here. So you're gonna see they are very put together. That's mean it's green. Stock is going up. Now, so whenever now you have the orange line, which is the signal line, is above, you see, is above now. The blue line, which is the signal line, stock is in bearish. As you can see there, you see from there, it's been crossing. It's crossing. So you see the blue lines go down now, and the orange line, which is the red line, is above the MACD line. So that's why you see stock go down, because the signal line is above the MACD line. So that's the way it's been working. So, all right. So you can just do it this way. So you can identify MACD line and signal line by knowing when they are going up and when they are going down. So in that case, that's the way. And you see those things, we call them histogram. So whenever you see the green line, so it's complete. That's mean the histogram make you see, it's make it stronger. See? The blue line, which is the MACD line, as soon as you see it there, see, it's going, and you see the histogram. down there. And then whenever you see now it's getting light, that's another technique I'm going to give you. Whenever you see the histogram, now you see it's very powerful, stronger. The green very stronger here. Now, whenever you see the green, it's a little bit light. That means the momentum about to change. That's why you see now the MACD is very strong up, and you see the green is very strong here down there in the histogram. And now, as soon as you see it's about to sloping down like this, that means the green line, the green thing from histogram, it will be light. That means about to change. The momentum about to move, to switch to red. That's why you see here the green, the blue line is moving down. And now we got the MACD, the signal line is crossing above now. Let me remove it so you can see better. Let me see if I can remove this so you can see this better. See? It's already moving above now. You see? The red line here. The red line is moving above. You see? The red line here, which is the orange line. Because this one, the momentum by the colors being light. See? Because here it was very green. Because this one, the momentum was up. And stock was up. And you see here, it's sloping down now. That's why you see the green getting light. It's the same thing for that side. That's the main idea about the histogram. When you see these two, that's why that is what it means when you see the histogram. We call that histogram down. So whenever you see now, you get the orange line, which is the bearish line, or the signal line, cross over the MACD line, stock market is bearish, is going down. And now it's the same thing as you see. Strong, very strong in the histogram here. Very strong. And now the histogram now getting light. The red, see, it was very strong. It was very red. Now it's getting light. We call that spam. It's light. That means the momentum about to switch. And as soon as you see the histogram is about to be light, if it was very strong, whether it's green or red, whenever you see the histogram is about to be light, the color is about to be light, not very strong, that means the momentum is about to be changed, switch on you. And you have to be prepared to make your switch. If you buy, if you have ever bought or whatever you've been doing, be ready to do the switch also, so you can buy or sell. You see now, it's histogram about to switch is light, because that is not really strong as it is here. That's mean you see the next candle is green. That's why you see now the MACD line is crossed over here. You see it's been crossing here. You see the blue line is crossing above. That's why you see the green candle, the green there. So that means stock moving here is green, because now the MACD line is about to move again up. So you have to always pay attention to this. And also this one is the same thing, the crossover, which is the crossover. The crossover itself is a specific, this one, which is the crossover. This one, we call that the crossover, the MACD crossover. Remember, we call this MACD line, the moving average divergence, and we call this one the moving average crossover. So the crossover is a specific signal generated by the MACD indicator when the MACD line crosses the signal line. So the crossover can provide a potential buying or selling opportunity. That's all they've been doing. It's a bullish crossover occurs when the MACD line crosses above the signal line. So whenever the MACD line, which is the same thing, you see the blue, that's the MACD line. Whenever the MACD line cross over, you see, it was here, it's cross over the red line, which is the signal. We call this one signal line, and we call this one MACD line. The same thing here, we call the blue line MACD line and signal line. The only difference between these two, the crossover, the MACD crossover and the MACD convergence divergence, is the MACD convergence divergence has a histogram on it, and most of the time we can use it for long term if you want to. And this one, the crossover, the MACD crossover, you can use it most of the time for the short term when you do trade for 1 minute, 5 minutes, 15 minutes. One day you can do it. You can always, most of the time, you can count on this one, the crossover, the MACD crossover here. And this one you can use movement. But the difference between these two, most of the time, is the histogram. The histogram gives you a better plan here because whenever you see the histogram down there, it's come up with the moving average, convergence, divergence, come up with histogram on it. So the histogram, what it does, it helps you to identify when the stock, when the momentum change, because you see it got stronger down there, back here. And then now, as soon as, you see, it's green too, it's stronger. As soon as the switch, the moving average is getting a little bit sloping down, and then we have it down there, light, and the momentum about to change. And you got a big red here. And the same thing here, you see now, it's been red, and the momentum is about to be light from the histogram here, the color. And you see, MACD line is crossover. And you have to be ready. And this one is always for the crossover MACD line down there. You have it most of the time for short term, but they've been doing the same thing. So whenever the MACD lines cross over, stocks, you see, crossover, stock is up. If you put them align to them, see, if you align them, it's the same thing. See, for instance, let me just remove everything for you, and then I will show you last thing just to align them. For instance, let me add again for you. Now I'm showing you a clean shot now. Let me just add them again for you. I'm gonna give you one of them. The moving average convergence, it's already been there, which is the MACD line. The moving average convergence, and I'm gonna add the other one, the crossover, MACD, MACD. I'm gonna add this one for you, crossover. Okay, that's it. And then you got it there. Now I'm gonna put them for you, align them as I told you. You see, this one, for instance, we have, you see, it's been green, and MACD line is green. And as you can see, they align together. Let me align them for you. I'm going to show you. See, I put it there for you, and then I put this line for you so you can see the move. The move. Whenever they've been moved, you can see that here. See, so that's mean whenever it's being green. Let me just put this on. We call it this one, the last one. Now, what I mean here. So I just show you this one. So how that works is because the MACD line is been moving. Now, let's remove this one. I don't need that. Now, see? MACD line crossover. See? And strong here. Stock is bullish. See? And whenever the MACD line has been crossover where I put the line, you see, it's going over here. Down there, it's been now the signal line back there on there here is crossover. That's why we got the orange line is over, and now the crossing also, MACD crossing over is there, and you got now bearish. And as soon as you see it's light like that, there's a switch. You see down here, switch. The stock is being now switch here. Is about to be bullish. You see, because down there, MACD line is being moving up. You see, it's moving up here. It's crossover the signal line. And you see stock is moving up. So as you can see, guys, that's the best thing, the best practice you can do. So if you like this video, just do me a favor, subscribe, like, and we'll be moving next time to lesson 4. Lesson 4. I always got something good for you. This is Harry. Take care. Like, subscribe, and share. See you next time. Take care. Love you guys. See you. Bye-bye. Take care.